Hey, everybody, happy Friday. I am so pleased to have a new guest on DCA. And the big question is, should we call it ABC? So instead of DCA. So this is, of course, for many of you who are not on Twitter, which I know many of you are not, but many of you already know the infamous TherealplanC, Plan Crypto. Say hi to everybody.
Hey guys, yeah, thanks for having me on, James. Really appreciate it.
Such a
It's great to
pleasure.
be
And
on with you guys. Yeah, big fan of you both, so it's pretty big honor to be on with you.
good. And we have the famous, dubious Benjamin Cohen. How are you today?
Hey, thanks for having me again. Pleasure
Always.
to be
No.
back here.
Well, we're one small little family here, and we just rotate this around. So this is a holiday weekend in the U.S. So hopefully, people are watching this before they take off for the weekend. So we have a packed agenda. We're going to talk about things that people kind of question, top of mind, and we'll keep it loose. But there will be a lot of charts. And before we jump in, one of the things we do want to show is this is a disclaimer. None of this is financial advice. These are just opinions from three guys on YouTube. And, please always do your own research. And second of all, we're giving away free subscriptions to Ben's channel if you're not already subscribed. And of course, the Real Plan C on Twitter. Plan C, for a second, would you mind telling us a bit about yourself and how you fell into this space for those who don't
Yeah,
already know you?
yeah, for sure. Been in crypto since I guess late 2017, kind of early 2018. But yeah, just as most people, I knew people that were in crypto that were the prices were mooning, they were making money, they were talking about it, and I kind of got into it. But I stuck around. That was the biggest thing. Is I hung out during the whole bear market of 2018 and just consumed content. And still here and still learning every day. I'm full time crypto. Just there's always so much to learn. But yeah, that's pretty much me. I enjoy it. I really enjoy just being a part of the space and just digging into charts and trying to figure out a way to be more less emotional when it comes to investments because yeah, I'm just more mathematical minded and more logical. And for me, it really helps to have models and things. And of course, we're humans; we make a lot of mistakes, but it's still nice to have the models to fall back on and over time adopt them and use them.
That's interesting. So we have a mathematician, a physicist, and a hardcore finance guy. So that's an interesting mix. I wonder if the three of us will get along. But one question, actually, just from what you just said, if somebody doesn't have that technical mathematical background, do
Well,
they?
I don't. I'm not yeah. I'm not a mathematician or anything like that. I always excelled in math, and it always came easy to me, and like numbers and things. But no, I don't have a formal background in mathematics or anything like that.
Good. So that shouldn't hold anybody back from getting
No,
into
no.
what you did. Excellent. Good. And so let's just jump into the first thought of the day. We are in September. A lot of people are talking about the September bloodbath. I just want to put together or show you a quick chart I put together yesterday. And I know, Ben, you're intimately familiar with the September history. And I'm sure the Real Plan C is as well. But when we look at this chart, there's a couple of things that stand out is sequences of things like two consecutive four red months we've had twice. We've had two consecutive three red months and one consecutive kind of 4 5 red month. So do you guys believe in patterns? And when we look at history, it has been a very rough year. Is history going to repeat? Do you believe September will remain negative as everybody believes, or it could be hardcore negative? The average loss for the month of September is about 4.6%, 4.87, sorry, not 4.6. But where do you believe September could go, or are we still under the cloud of Jerome Powell and the Fed? Ben, to you first.
Yeah, I mean, my opinion for 2022 has been mostly the same, right? Like cash is king. Bitcoin is probably mostly where you want to be. September's average drawdown, according to my charts, over since 2010 is about negative 6.7%. But the same deviation on that is like 12.9%. So I mean, it could easily be positive even with a one standard deviation. My general expectation this year has just been to basically assume there's going to be a bearish bias. So, like, if I had to pick one, I would say it's more likely to be negative than positive, but that doesn't mean um, it has to be negative, right? And there's just simply no way to know what it's ultimately going to be. Um, because to some degree, like it's just an arbitrary point to like pick a specific day and then say 30 days later, is it higher or lower? So again, if you made me choose, I would say probably more likely to be negative, just because September is the worst month for not only Bitcoin but crypto in general. But we've had what, 3 green Septembers in Bitcoin's history, so I mean it's certainly not impossible.
Yeah. And the other angle is as well, many people believe that, September is red because, the stock market takes August off. When they come back, they reshuffle their portfolios, which tends to be a little bit of window dressing, which causes the redness in the equities market. And because of the correlation between crypto and equities, it's part of the reason why September is red too. Do you subscribe to that theory?
I mean, not necessarily. I don't know exactly. I mean, I think that in terms of the stock market, I know a lot of people have sort of been fearing October. And yeah, like everyone kind of comes back after the summer, and then you take sort of like a general assessment of the entire market, and there can be some bearishness there. Um, I don't really know if that has anything to do with it. I mean, there's also been speculation before that it has to do with like, like mining and the rainy season and that kind of stuff.
Oh, in
There's a
China
whole
back in
lot.
the day, that's
Yeah, like
true.
China,
Yeah.
of course, it's not as big of an issue anymore because they, after what happened last year. But there's all sorts of speculation as to, to what causes it. And I remember last year I made a video on going into September and even saying like it's likely not going to be a great month. Um, but then the very first week we pumped, and
Mm.
then for the next like 3 weeks we dumped after that first week. But that first week we went to like 53, and then we dropped back to 40K, and then like we held the 20-week SMA, and then we went back up to the all-time high. So yeah, I mean, again, my general expectation is that it's probably going to be bearish, but it doesn't mean it has to be.
Yeah. So, Plan C, what do you reckon? I know we lost you there for a second.
Yeah,
Internet.
sorry, I lost connection or something happened. Are you guys looking at? Can you see the charts? Because I can't see them on this screen. Are you just looking at them on YouTube, or how do you guys see the charts?
Yeah, YouTube.
You're looking at them on the. Okay, gotcha.
It's
Gotcha.
just some September history. But what's your take on September? Up or down for the month?
Um, I mean, I just would be guessing. I saw this. I saw the data. I was looking at what Ben posted there. Historically, it hasn't been a good month. I would say down myself, or sideways. Probably more so sideways, I would say, myself. But yeah, I don't have a strong opinion really on September.
Because we've been hit so hard already. And that's kind of my thesis, is like, when the market's already down, we haven't had a situation where we've been so beaten down before going into September. Therefore, it may not be that bad. Anyway, let's jump to the next topic we're going to discuss today. And first of all, is your thoughts on whether or not peak capitulation is behind us. So did we hit full capitulation? What is your kind of number one telltale sign that the market has really been through capitulation and we will not breach that 17,500 level again? To you first, TherealplanC. I know you have a couple of slides too from you, if you'd like me to showcase.
Yeah, we can go through those quickly. Yeah, I would say myself, like with the on-chain data, just to caveat it, 88% of the coins in supply are on chain, and 12% are on the exchanges. So it doesn't account for all the coins, obviously, and the price is being determined on the exchanges. So on chain is great for really high time frame, network health, network adoption, seeing all those sorts of aspects. But the price is determined, in the order books on the exchanges. That's the 12% of the supply that's really determining that. So this data is useful. As Ben always says, all models are wrong, some are useful. I do think these are very useful models, but it's just, if there's thin order books, wicks can happen. Just saying it, we're not going to go below a certain price, even though I think the peak capitulation is in, unless we have a significant black swan. Obviously, that's always possible, or we have like severe headwinds in the macro markets. But I do think, like, just based on the historical on-chain data and TA, you could say the capitulation event is in the major one, at least across all the data points. But that doesn't mean we can't have wicks down. But just to look at the first chart there, that one is kind of highlighting. So it's realized losses on chain. So it's basically doing an aggregate of all the coins when they last moved, Now they're moving again. What was the price? It's determining that and basically saying the combined realized losses from the network that day. Now you can look at different moving average just like you can with TA. And so with this specific model, I'm looking at basically a 14-day window, and I'm looking at a z-score. I'm denominating the realized losses in Bitcoin, because if you don't do that, then obviously with the higher market cap as Bitcoin gets adopted, it's really hard to compare. So there's various ways you can do that. You can divide it by the market cap, but I chose to use it's hourly data from Glassnode, and I'm taking the realized losses and just dividing it by the basically by the price, to get it in Bitcoin terms. And so we like, the reason why I use a z-score is because by its nature, a z-score is looking at standard deviations from the mean. So you're looking at like very rare events, and you're looking at peak capitulation. So you're actually looking at these very rare events and very outliers in the data. And so we actually hit I think it was a 5, which is the highest we've been since I think it was April of 2013 or something like that. So it's not common. And like the last time we had this level of a peak, and this has come down already to the mean. So it's actually gone back down basically to 0, which is the mean. When you see it go negative on the chart there, when you guys are looking and you see it go below, that's basically the other side of the mean. It's actually less than the average as far as losses. But we're looking at the peak capitulation. So the last 2 times we had major capitulation, was COVID, at least with this metric, and then obviously the last bear market of 2018. So that's pretty much that, unless you guys want to add anything. But
no, Ben, do you see theory that this does indicate that maybe peak capitulation is behind us, especially when you compare it as the highest level event since 2013?
I think there's a probability that it's behind us. Like there's a certain, there's no sure thing in the market, right? Like there's no way we can fully know until we look back in a few years.
Yeah.
There are certainly some indicators that would suggest that the bottom could be in, but there are still plenty that say, that say counter to that. We can look at on-chain data, and there's plenty of on-chain data that say the bottom could be in. You could look at the Peel multiple, you could look at the NVIV Z-score, but other things. Can I share my screen, or will it let me here?
Yep.
Let me see if I can share my screen right here. All right, can you see my screen?
Let me just edit. Yep.
Well, let me just show you why I remain hesitant, okay? Because I could show you 10 indicators that say the bottom's in, but there's still some that are not yet that convinced. And one of them, and let me start with the on-chain data actually, because that's what we're talking about. One of the on-chain metrics that I like is the supply of Bitcoin and profit and loss. What you'll notice is that historically, the bottom does not occur until after the supply and profit and loss have crossed, until after they've crossed. They haven't crossed yet. The only way they're going to cross is if we go, actually they'll cross even if we go down to say like 18.5. I think they'll actually cross there. But if you look back to the last 2 bear markets, the bottom didn't occur until the supply and loss went to like 60%. And the same thing occurred in the prior bear market before that one. And then there's 2 other indicators that I'm looking at that are keeping me somewhat hesitant to say, because everyone keeps asking me, is the bottom in, Yeah. And the other one that I look at is the running 1-year ROI. And if you look at the running 1-year ROI, it has 3 very clear and distinct bottoms, right? At about 0.2, somewhere around 0.2. And recently I added this future projection, so I can actually say, what do I think the price of Bitcoin will be on a certain date? Okay, so let's say on December 3rd of 2022, I think the price will be like 14K. What would that look like? It would get the 1-year ROI down to about 0.239 or so. If I say it'll be 11K, it gets it down to 0.2. Now, if this were to play out, which I don't know if it is, let me be clear, but if this were to play out, then I would be like, all right, I think the bottom's in, right? Like it looks very clear and convincing to me. I think that the bottom is more likely in. But this isn't there yet, so I want to be a little cautious before I just jump the gun and say definitively the bottom is in. And then one more indicator that I want to just caution people with, because I have to play devil's advocate against the optimism, because I know I've been wrecked so many times in these markets. I just want people to look at it. a couple different ways. If you look at the ROI from the cycle peak and you compare to the last two bear markets as measured from November, we're right where we always are at this time. Like, this time isn't different. It's the exact same thing, where we're down about 60 to 70% from the all-time high. We start having all these discussions on, is the bottom in, is it not in? And these discussions can go on for months before there's any type of like reconciliation. So, I will agree that there's like, I can find 10 indicators on my own website that say the bottom's in, right? I can easily do that. But those are not the ones that I'm more risk averse than I think most people. Like, I want to see a lot of confluence among all of the indicators. I want to see like, hey, it's definitive, it's more definitively in. So I'm still being patient. I want to see what happens as we get into the end of the year and see kind of where these final indicators show. And then as we get into 2023, I'll probably be have a bit more of an opinion on the bottoming in. But until we get through the next 4 or 5 months, I think it remains. People should remain cautious, because there are a few indicators that say this time is not different, and there still is a chance we get another leg down.
Awesome. Very good. Now I'm going to try. I've got this issue where there it is. Select all. Boom. Thank you for sharing that. So there's one other quick chart from PlanC. Well, PlanC, first of all, do you have any comments on what Ben just showed? And how does this with yours?
Yeah. I mean, I agree with him. Like, as far as that's the metrics he showed and everything, like, there's definitely on-chain metrics showing the bottom's potentially not in. It's all probabilities at the end of the day. And there are so many X factors this time around. There's so many unknowns. People talk about all these different narratives. I look at them as headwinds. There's a ton of headwinds. We don't know how stormy the seas will get. The thing that people don't talk about also, though, is Bitcoin itself is a different beast. We have a higher level of adoption, so we have a bigger boat. Even though the storm might be stormier seas this time, we might have a better boat. So I'm definitely not fully convinced the bottom's in by any means. There's a lot of on-chain metrics pointing that that's a probability, a decent probability. But at the end of the day, I mean, like I said already, the order books, all it takes is one crazy headline or world event, and the bottom's all of a sudden not in. So I love looking at all the data, and I agree with Ben. Like, there's still a lot of metrics you can point to that are not that don't fully convince me the bottom's in, basically.
Okay, this is your the next chart we're going to look at real quick. We'll spend 60 seconds on this only. That's your extreme network capitulation. And you can see the big red bars, obviously, where this has happened in the past. And the SOPR is the spend output profit ratio, and evaluates the profit ratio of the whole market participants by comparing the value of the outputs. And we had 55 days, I think you said, in 2011, 62 days in 2015, 33 days in 2018, and we are at the longest ever right now at approximately 83, 84 days. So how does
the last sorry James, the last 2018 bear market was 133. It might not show it. Yeah, it's a little bit longer, the last one, but everything else.
Yeah. So what do you want to say here about this particular chart, and what does this tell you? We have maybe another 50 days to go, or is this time different?
Yeah, I mean, there's just so many of these sorts of models you can make where it's like, I like these kind of models because, it's not just looking at the like mean, like deviations from the means of these different models, but it's also the time element, right? And it's comparing to previous cycles. And so it also gives people something where they can look at it and be like, even though the price didn't move the last couple of weeks, we went up and down, we're adding time to this model. And if the model holds, then, it might mean we're closer to eventually recovering. So yeah, I would say definitely, there's only 3 data points to compare to. It's something, we are seeing there is a pattern there somewhat dubious, like Ben says, right? It's just a model, but definitely, I mean, it'll be interesting to see as soon as we kind of hit like the longest time ever, which is like 133 days. So another 2 months or so, kind of reach that the most we've ever been. Then you start to kind of be like, okay, but obviously, it's a model. So we're going to be paying attention to macro and everything else as well.
Yeah, you said one thing previously, though, as well, that I want to drill into, is you talked about the boat being a bigger boat, better boat. I talk about being the market participants are very different this time around than they were last time. I think you both agree to that. But how much do you think that has an impact on where things are going, things like market manipulation, maybe by the new players that are in there. Do you guys look at that at all?
Hey, go ahead, Ben. Yeah, but I hear him speak first.
Just on it being different, like the makeup of like the
Yeah.
investors in the market are different. I don't think it makes a huge difference, honestly. I mean, like there were still funds buying Bitcoin even in 2017. I mean, you didn't have MicroStrategy publicly saying that they were buying like billions of dollars worth of Bitcoin, but I mean, if anything, that's I don't know that that's necessarily helping the case, like helping the price right now. So no, I don't really think it's going to make a huge difference, except for I do think the main thing that you've seen is that we're spending a lot more time in the upper regions and yeah, and even, probably even in the lower regions, right? I mean, like if you think back to 2021, we essentially just had like an entire year of going sideways at fairly elevated prices, and it looks like just some big distribution phase. Wyckoff early on, and then we had it again in later in the year. And maybe this is an artifact of the changing, um, constituent of who's actually participating in this asset class. But at the same time, I don't necessarily think it's going to make having a big effect on like the overall trends, right? Like going down a certain amount in the bear market, we're still seeing diminishing returns. I would just argue that diminishing returns and sort of the nature of Bitcoin and the general direction that it's headed is already accounting for bigger players coming into the space. And more than likely next cycle, when we go back up and hopefully we put in a new all-time high, we'll continue to see diminishing returns from one cycle to another. So, I mean, it affects it in a way, but not necessarily in a way that's not predictable.
Yeah. Awesome stuff. We have one chart as well we're going to touch on. It happens to be called a DCA cheat sheet, so we have to bring it up because this is the DCA show. So let's look at this for 60 seconds. Long-term investor DCA sheet. Basically, a couple of things here. Some of the time frames as well. I think 96 days in 2015, 52 days in 2018, 60 days in 2022. The white line is 22/8/21. We are under that right now as we speak. So, the Real Plan C. Tell us about this real quick and what it tells the listeners.
Yeah, I mean it's a TA model. It's a mean reversion model, and so you can make a million of these different models where you figure out what like I like to use higher time frames. So you could use a 4-year moving average, but I found the 2-year worked really well. You could use just the 2-year SMA, or you could use just the 2-year EMA. With this specific model, I combine them. So just average the two, and then I did basically a multiple showing multiple of 0.65, so just 35% below that line. And so it just by using that, you can get a sense of how oversold you are, how far away you are from kind of the mean of the 2 years. There's all like the original person who created this similar model was Investor Tool, I believe it's called, and it's on Looking at Bitcoin. There's a 2-year. Anyways, guys can check it out there as well. This is a little different, but yeah, it's just if you use models like this, again, it just helps you to not be as emotional, and you can kind of wait until you also get to determine your risk, because you can set the model, you can set it at 0.7 or you can set it at 0.6. Now, the lower you set it, it might not get to your point, and you might never DCA into the market. So it totally depends. And so with this, it's just kind of where I put it. But we historically have spent a couple months under this line. And if you would have DCA'd, we're looking in retrospect, if you used a model like this and you DCA'd every day that you're below this sort of a line, you'd have a great cost basis throughout all the previous cycles. Now, it's easy to look back and say that, but we are going through that right now, and it's saying, below 22 is not a bad day to DCA. But that's where I set it. Someone else would set it maybe lower and wait for lower prices and maybe DCA less days. So yeah, just different ways you can use it.
Beautiful. The 22/8/21 is an interesting number because it's very close, extremely close to the 200-week moving average. Is that just a coincidence or random?
I'm not. Yeah, it might be. Well, I mean, I guess it's coincidence maybe, but I don't know, maybe not. It's the 4-year. Well, Ben can maybe speak to that more because he's followed the 4 years. The model around that for quite a while.
Yeah, it's always interesting to see confluence across multiple indicators. Ben, do you read anything into this 2-year SMA plus 2-year EMA divided by 2 multiplied by 0.65, almost equating to exactly the 200-week moving average, which just occurred to me right now at 22,821. I think the 200-week is about 22,700.
I mean, yeah, I mean, it looks like a decent model. Look, I mean, I think we should also separate like the question of is the bottom being in, and like is now a good time to start DCAing into the market, right? Like, there's two very different answers to that. Like, you could start DCAing into the market even if you're not convinced the bottom's in. So a tool like something like this, where it says even though the bottom might not be in, it's not necessarily the worst place to start coming in back into the market, like scaling in your position. If like if you spent 2022 saving your cash and just sort of saying, you know what, it's a bear market, everything's just going to go down, especially as we get into the end of the year. Historically, we know that we get market cycle bottoms around, like within the next 3, 4, 5 months or so. So I think, if you're DCAing around that time, giving some tolerance on either side, I think it's a generally good idea. So yeah, I mean, DCA tools like this, I think are generally good for investors. I think the difficult thing, though, practically speaking, with these types of tools, is that they're really only useful for the people that are still here, because the people who left already, that they probably won't come back until the bull market is back on, and then when you show them these kind of things and you say, all right, well, now's not really the time to buy anymore, you missed that opportunity, they don't like that, right? Like, they don't like it if you say that. It's like I in my channel, I talked about Bitcoin when it was at 3K and 5K and 10K and 20K. And then when I went to 30K, I'm like, all right, guys, I don't think we need to be buying Bitcoin I don't really want to buy Bitcoin at 30K. This is back in, like early 2021. But you get all the new people coming in that say, well, why not? Um, and that's sort of how the game works. So I think these are great tools for the bear market, for those who stick around. And in the bull market, everyone just ignores them.
Yeah, I'm going to put you on the spot. I'm sure you saw the Bitcoin dominance falling at below 40% today, which
Oh,
just
yeah.
many people
Yeah.
by surprise. Is like, does this mean that everybody's just YOLOing into alts, or what
So
the hell's going on?
interestingly, so there's two different charts. So there's the one with stable coins and the one without stable
Yeah.
coins. If you look at the one without stable coins, arguably Bitcoin is just putting in higher lows, right? Like,
Mm.
it bottomed at like 40. I believe in January it bottomed at like 40% or something like that, and then a few months ago it hit like 44%, and now it's at like almost 46%. So I think we're heading in that direction, and honestly, I thought that we sort of already had this move that we're having now 3 months ago. I underestimated the hype that the merge, I think, would cause. I kind of underestimated that. But if you look, there's a lot of confluence in Ethereum dominance getting to really historic highs at the same time the Bitcoin dominance is getting to historic lows, which also happened right around the time last cycle once we were at 60 to 70% down from Bitcoin's all-time high. So my main concern for the altcoin market is that after the merge, which is only, I mean, it's coming up relatively soon. The hype's we're gonna see what happens, right? Sooner rather than later. My concern is that after the merge, will the hype for the altcoin market sort of dwindle down and Bitcoin take control again? It's taking longer than I thought it would, but I still think that the Bitcoin dominance will shoot up quite substantially over the next, like, either in Q4 or really early. I think it's going to start going up probably even this month, to be completely honest. But um, I would say very likely in Q4. But yeah, I know a lot of people have been trolling me on the Bitcoin dominance recently. We'll see what happens. We'll see what happens by the end of the year, and then we'll sort of make our assessment of the situation.
Okay, let's switch.
Is
And sorry.
I was just going to say, do you guys think that's just a symptom of like bear market rally, kind of that the alts are still holding some level of dominance? Just the fact that you're bound to have a couple rallies throughout the bear market.
Yeah, I mean, I think what's happening is it's sucking in liquidity from everyone who's buying in on every single bounce. It like sucks in all that liquidity, so then when it goes back down, no one has any cash left to buy. It's been really brutal this cycle because all of these moves back up, they're lasting a long time. Like last cycle, it would just go straight up and then straight back down, and it was relatively seamless. This time, we go up to 60K, we spend 4 months there, right? And then we come back down. We go back up, we spend, 1 month there or 2 months there and then come back down. We're kind of seeing the same thing on the way down for the altcoin market. So yeah, I think it's just the case in these bear market rallies, altcoins can outperform Bitcoin, um, and I'm not like the longer I will say this, the longer that Bitcoin spins below 20K, I've noticed that like altcoins are starting to lose confidence a little bit. Like if you look at AVAX Bitcoin, it's rolling over. Solana Bitcoin is rolling over. There's a few that are holding out, like Ether Bitcoin, BNB Bitcoin, Matic Bitcoin, even ADA Bitcoin is holding above its 200-day right now. So there are still a few holding on, trying to provide some hope to the altcoin market. But I don't know. I mean, historically they won't hold these levels forever, and there will be a lower low. If history is any indication, of course, this time. I mean, this time could be different, right? Everyone always talks about, is this time different? Like I will say, this time could be different, but I am not counting on it being different.
Good, interesting insight. My take is people. I think people have like at least one cycle below their belt, and they know they need to catch up, and that makes them more prone to taking on more risks. So they're YOLOing into riskier assets. That's my thesis as to why people are buying stuff. Because there's so much more choice right now, especially in the L1 arena and other areas. So we'll see. It'll be interesting where that goes. So let's talk about this next little chart, which is I find very interesting. It's the 300-week moving average. Bitcoin in its history has never, ever hit it. So people talk about the 400-week, the 300-week, the 200-week, 200-week especially. But this 300-week moving average has a very peculiar number, 17,309. We fell, if I recall correctly, to 19,570 or 19,573. That was the bottom. So people say it is impossible for us to hit the 300-week, but nothing is impossible. And if it does, definitely this time is different, as they say. Do you guys believe, there's a lot of people waiting for the 12,000 and the 3,500 and the 10,000, there's people all over the internet talking about that with very high degrees of confidence. Then you've got other people like Il Capo flipping bullish all of a sudden, which kind of throws a curveball in there. But what do you guys think about this 300-week moving average, or do you even look at it at all? Or is it just another number? DrealplanC first.
Oh, okay. Yeah, to me, I mean, moving averages are always interesting, just to compare past data and mean reversion. But no, I don't think there's any magical wall at that specific, that specific moving average. It's just another data point that can break at any time. Having said that, I mean, the fact we've never been there, again, when we start to create these records in certain metrics, yeah, we are seeing that across some metrics. That's when I personally start to say, okay, this really could be different. It might be the same as far as the cycles, but again, those headwinds being unique is causing more deviation than we would normally see on a lot of these models and data points. So, I don't have a specifically strong opinion on that one, but it is interesting for sure, and it's something to keep an eye on. And yeah, if it breaks, I mean, that would be a first. So that's noteworthy for sure.
Yeah, Ben, how about you? Like all these weird numbers. Like 5 years ago, Bitcoin was at 20,000. It's under where it was 5 years ago, nearly, give or take a couple of weeks. And then we have this 300-week, the 200-week, all this weird confluence. And the other interesting point is 10 years ago today, Bitcoin is at $10. So it's just weird. 5 years, 10 years, these different moving averages. Do you read anything into those tea leaves at all?
I mean, historically, the 200-week has been a good spot to get into Bitcoin. This cycle, I mean, we're now just kind of hanging out below it right now, so it's not providing the same support it has in prior cycles. So, I mean, we could certainly go to the 300-week. I thought we had been to that. We came within $100 of the 300-week in March of 2020, because if you look at any of the Bitcoin charts, Bitcoin in March of 2020 had a wick down to 38.80. And at the time, the 300-week was 37.89. So it was in the $100 of the 300-week SMA. So arguably, as long as you give it some tolerance of $100, you could say we have hit the 300-week. And if we can do it once, we can certainly do it again. So I don't think there's anything necessarily saying that we can't hit the 300-week. I would argue that it's happened before. It could easily happen again.
And we were within $200 of the 300-week. On June 16th or June 12th. So we get real close, but never close enough. Maybe there's some magic elves that buy right above this level just in case and keep the price above. This is cool. We have, let me see, one more a couple more topics. Okay, so we got these two things. I laid out two charts that concern you. One chart that concerns both of you, if you have one in mind. I think, Ben, you may have shown yours already. And then we're going to flip to one Hopium chart. So the first one is, and for those who love charts, a lot of charts today. We did warn you about that at the beginning. This is the TherealplanC's Hopium chart. No, this is concern chart. Sorry, got it mixed up. Can you walk us through this one for a second, the TherealplanC, and explain why it gives you concern?
For sure. Like, I wouldn't say it's crazy amounts of concern, but it is noteworthy again that we from a standard deviation standpoint or a z-score, we went quite a bit lower than we've ever been on this specific model. And what this is it's the network cost basis. So it's actually the aggregate of the entire supply, when those coins were purchased, what was the value. So it's a cost base, just like an individual can have a cost basis. This is the cost basis for all the on-chain coins, or all the coins off exchanges, I should say. And I mean, we've you can look at it as a proxy, I believe, for inflows and outflows of capital into Bitcoin and out of Bitcoin, because Bitcoin has, like, people call what's called a realized cap. So market cap is determined on the exchanges. That's more the speculative value. Realized cap is actually more to do with, it does again approximate more actual inflows of capital into an asset and out of an asset. So we saw the biggest change in the cost basis of Bitcoin from a z-score standpoint over a 90-day window than we've seen throughout the entire history of Bitcoin by far. And so to me, this happening kind of says, okay, we saw an extreme outflow of capital away from Bitcoin. Now that does make sense given the fact that macro is very risk off, right? That's the very strong effects that are occurring. A lot of people are speaking about it. Bitcoin's not quite considered risk off at this point of the game. So it does make sense, but at the same time, seeing that level of deviation, it's like, okay, it's a lot of capital moving away from Bitcoin. But there's a lot of other metrics you'd have to analyze the capital flows to make sure that is there's confluence across multiple ways of looking at that. So, but that's kind of my, there's other charts, but this one I was just like, okay, well, that's a first, and that's a big deviation for sure.
And the fact
but there's reason for it. I mean, macro. This is that's the new variable. That's the new risk off environment, right?
And we are in unprecedented macro times. As I say, every indicator I look at, everything is broken. Nothing is. We literally, history has never seen the type of macro situation we have today, and it's fascinating. Ben, do you read anything into this capital outflow at all? Does it give you concern? Keep you awake at night?
I mean, I wouldn't say that it keeps me awake at night. I think it's clear that Bitcoin is very much dependent on liquidity, though, which is, from a macro perspective, is some reason to be cautious right now, since the Fed is sort of draining some liquidity, and you're seeing the dollar go up. But going to your question of, like, charts that concern you versus give you hopium, I already shared a lot of charts that concern me, so maybe I should share one that is a little bit more optimistic.
Good.
So let me do that and find it. All right. So this is the I'll share a couple, actually. I'll provide a little bit of hope. I'm not necessarily
double hopium from Ben. This is unprecedented.
I'll be much more optimistic next year. Let's just try to get through this year in one piece, and then next year I promise you I'll start to get more optimistic. But so these are hash ribbons with price momentum included. And one of the interesting things is, if you look at all of the prior bear markets, so like if you look at 2011, 2014, 2018, and now 2022, the only time that the hash ribbon flashed was after the bottom was in, right? It only flashed after the bottom was in over here in 2011. It doesn't tell you the bottom, right? It just flashes after the bottom is in. You see it in 2015 as well. It flashed here in 2019 after the bottom was in, and it's flashed again in 2022. So, I look at things like that and I say, well, the bottom, while I do fully understand, I admit to myself that I don't necessarily know if the bottom is in or not, again, there's, as I said before, there's like 10 indicators that you could look at to say, well, maybe the bottom is in, based on some of these indicators. Again, I'm a more risk averse person. Like I'd rather, especially when the Fed is raising rates, and as bad as the macro looks right now, I would rather, like, I guess my position on the matter is I would prefer to just sort of sit out of the market to some degree, especially with the altcoin market, not necessarily out of Bitcoin, but I would prefer to just sit out and not make any money than to risk it, and then to risk losing like 80% of it or something, right? If that makes sense. But if I can show one more chart, because there's always a few. Another one is the regression chart. This is a logarithmic regression chart I fit back in 2019. Arguably, it does need to be refit every cycle, otherwise it will slightly overestimate it. But you can see we're right where you would expect us to ultimately be. We talked about having a date with destiny at the 200-week SMA back when Bitcoin was at 40K. That's already transpired. And I mean, there's a number of other things that you could look at that are somewhat bullish. But to just sort of leave one question mark in your mind, because I can't just leave it on a too bullish note. There's one last indicator. If you look at the balance price, which is an on-chain indicator, it's an on-chain indicator. Historically, the price has always bottomed below the balance price, always. And we have not gone below the balance price yet. The balance price right now is coming in around 16.37K. So we'd have to go put in a lower low for us to actually go below the balance price. So it's this weird thing where half of the indicators say the bottom's in, half of them say, hey, hold on a second, don't get ahead of yourself, the bottom might not be in. And it's what it shows me, though, what it clearly shows to me is that, look, again, as we've said before, all models are wrong, some are useful. You should not rely on any one indicator to help you figure out what your strategy should be. I think you should look at the confluence of as many indicators as possible. For instance, let's imagine a scenario where all of the indicators that we look at all scream, this is the bottom, right? Not just half of them, all of them do. Then I would feel a lot more conviction in going, risk on and saying, well, to hell with it. If it goes down, it goes down. I want to take the risk. Right now, I think, for me personally, I'm fine taking on some risk with the blue chips, like primarily Bitcoin and ETH, but I'm not, and most of that with Bitcoin. But I'm not that interested in taking on the risk with altcoins, because it's usually at the very end of the bear market that altcoins kind of like puke it all out. Like retail just pukes the altcoins out at the very end, and then we finally start the new cycle.
Awesome, good stuff. The real one. Oh, sorry.
Aspen, because in my head I'm trying to like work it out. I'm just like, I wonder at what price pretty much every model and metric would it be flashing? Probably like, what do you think? Like, do you think 13,000 or is, I mean,
I would say somewhere between $10,000 to $14,000. Basically every single indicator that could have been made on historical Bitcoin data would have flashed, because historically Bitcoin has lived through a secular bull market in the stock market. And normally after you see like an 85% correction, that's it, right? Like it's going to go up after that. So yeah, I would say somewhere between the range of 10 to 14K. 10K might be a little bit low. I don't think it'll take to 10K to see them all flash. You'll probably you'll see the supply and profit and loss flash if Bitcoin goes down another like $1,000 or so. For the supply and profit and loss, it would have to go down about $3,000, $4,000 for that to flash, and maybe like 16K or so. For the 1 year ROI to flash, the easiest time for it to flash would be a 1 year after the peak, which would be this November. And it would flash at 0.2 if Bitcoin were at 14K. So again, if you see that lower low at the end of the year, I do think you would see every indicator that could be made for Bitcoin would have been flashing at that point. The only last question mark at that point is the macro situation. Like, what is the Fed going to do? Like, for instance, like if the S&P just stays in a bear market for all of 2023, I don't think it will, right? Let me be clear. I don't think it will stay in a bear market for all of 2023. But if it did, I don't think Bitcoin is not going to be in a bear market. Like Bitcoin's likely going to be doing more or less whatever the stock market does, just with more volatility. So again, yeah, you get us down to 10, 11K, that's really, really low. If you get to 13 to 14K, every indicator, I think, will have flashed. And then it just becomes a question of more of a macro sense of like, what is it going to take for the Fed to pivot? What will it take for them to cut rates?
Awesome. So the very last chart of the day, before we do a couple of quick questions from the audience, the last Hopium chart is from TherealplanC. let's jump into a little bit more SOPR. Walk us through this one, the Real Plan C, and why it gives you so much hope.
Yeah, I mean, it's just the for this one. I mean, we looked at the 90-day, so this is the 14-day, and we reached the same level we've reached two other times. I know it's only two data points, but you're looking at an extreme point of being basically the spend output profit ratio over a shorter time span. It's the peak capitulation. Again, it goes to the argument of at least there are, like I said, charts that are give some good evidence that the bottom could be, and this is one of them. But yeah, if you look at the returns once you get to those levels, just based on this one chart, they've been pretty extreme. Like I said, we've only been there two other times. We didn't even get this low during COVID, and we didn't even get this low during the 2015 bear market. So been here twice before, and also just the level of the bounce. So this is not based on price. This on-chain metric has no relationship to price. It's strictly just the spending behavior, how much realized losses versus realized profits in the aggregate. And the biggest thing that gives me hopium, I guess you could say, on this one metric, is just the bounce we put in on this already, and it's the recovery more than anything, and also how low we got. That's kind of the combination of both.
Awesome. Good stuff. Ben, any comments on the final chart?
Yeah. Well, I would like to say one thing about, in terms of a lot of these charts to remember. Okay, in 2021, every metric that I had was almost every single metric that I had was screaming the peak was in April, not in November, right? Yep. So most indicators did not catch the November top. They caught the April top, not the November one, where technically the price went higher. So I think it would be wise for us to consider that there could be a circumstance where, like, by a lot of measures, the bottom technically could be in, according to some indicators, but it doesn't mean that, there can't just be some type of leverage flush out where you technically put in a lower low by price, but maybe some of the other things are putting in a higher low, and you start to see some type of like divergence there. Like maybe the RSI is putting in a higher low, even though the price is putting in a lower low. That's what happened in the bull market, where the highest RSI came back in early 2021, and then it was a relatively weak bounce, but it technically put in a higher high. So we could see the same thing happen in 2022, where a lot of these indicators are bottoming, and they sort of seem like they catch a decent bottom at 17.5K, but maybe the true bottom is at 13 or 14K. But remember, even if we go to these prices, we might not be there very long. It could just be like a wick, and then we're right back up.
Awesome. Good stuff. So we do have a quick kind of a closing comment before the fun question, then we do the questions. Again, big show today. Thank you all for being patient and getting through, but these guys are dropping golden nuggets on you. First of all, the old adage, the 4 most dangerous words in investing are, this time it's different, but I see a lot that is very different this time. The macro backdrop, the recession, the high inflation, the low interest rates, the money printing. Bitcoin was built in 2008 because of a financial crisis and money printing, and that was the catalyst that brought it to the market. So, quick question, yes or no, from each of you. Plan C first. Is this time different, or is it the same?
There's elements of it that are going to be different, I think, this time. Yeah, I do think we'll see some models break.
Yeah, good stuff. Ben?
I mean, are you specifically saying with regards to like the macro outlook, or like just like the price
Bitcoin action? Bitcoin action, what it's going to do?
I mean, I don't really think this time is that different. I mean, if for it to be the same as every other time, we would need one more leg down. If it's going to be the same. If it's different, it means that we're already at the bottom, or it means the bottom is much lower than whatever, like if we go to 14K or whatever, and then all the indicators flash and that's not the bottom, then it could be different that way. But I would argue that there's no evidence at this point that this time necessarily has to be different than every other bear market that we've seen.
Awesome.
It could be. I mean, it could be depending on how quickly inflation comes back down. If inflation comes down linearly, like if it just comes straight back down over the next like 6 to 12 months, then it could play out the exact same way that it has in the past. If it stays elevated for the next like 18 months, then that might put throw in a wrench into things.
Good stuff. Final fun question to you first, Ben. How many hours a day do you look at charts? I hope it's not.
Probably more than I should. It's funny because in 2018 I didn't even look at the chart that like I didn't look at it nearly that much because I didn't have a channel, and I just At one point I went like 3 or 4 months without even pulling up the price because I didn't care because it got really boring. It was just at 6K forever. Now, I mean, probably. I sort of switch around between different charts and whatnot, but I would say like 3 hours, 4 hours a day for sure. Sort of going through a lot of different charts, but I mean, honestly, some days it could be more than that. Um, I know I've sat around watching the charts, especially I find myself watching the charts more frequently when it's doing the opposite of what I think it should do.
Yeah.
If that makes sense. Like if
Okay.
I think if like earlier this year when the price was going down and I thought it should go down, I'm like, all right, this is fine. And I was able to sort of tune out a bit more because it like made sense to me. But I find myself when it doesn't make sense to me, like right now when the dominance is going down and I feel like it should be going up and altcoins are still holding. Like I find myself watching the charts probably a bit more than I should.
Good stuff. Real Plan C, you're up.
I would say like it does vary quite a bit. There's definitely days where I'll spend like 12 hours plus like looking at just charts and stuff. But that's not all the time. I would say on average probably 5 6 hours a day. But I'm maybe that's it's hard to estimate exactly, but yeah, maybe 4 or 5 hours a day. But as far as involvement with like crypto related things, like it's a lot of hours. So I don't know how many hours, but I would say 10 hours a day at least that I'm interacting in some way with crypto, either consuming some sort of content or looking at charts or listening to macro stuff. Like yeah, it's a lot of hours, but I love it. That's why I put in the hours. So.
Good. And if anybody's wondering about me, from the time I wake up in the morning, there's always a chart. No matter what room I'm in, there's always a chart. And I have my charts rigged with alarms. So if something hits a certain level, I get notified and I dig in and find out why. And I also look at them during the night too, in case there's a good buying opportunity or trading opportunity. So with that, we're going to go take a couple of quick questions from the audience because this is, it's all about answers for the audience. So let me pull up a couple of quick questions. So first of all, from Jabba, who's got the best community in space? Yes, DCA. People love this show. So thank you for being here and thank you, Jabba. The question next question is from Amit Arora. Hi guys, Bitcoin expected bottom ? So this could be two angles, price and when. So I'll ask you both again quickly. For Amit, if it's not already in, when could it be in, and at what price would it be? Ben, you first. I know you hate being put in the spot, but
No, I mean it's fine. I mean, I feel like I'm fairly open with my positions are. So if it doesn't go how I think, then it's no, like everyone's gonna know, right? So I still think the dominance has to go up before I would be more convinced that the market is healthy enough to call the bottom like more convincingly. So I think like for this time to be the same as every other time, I think it's going to happen, assuming it already hasn't, right? This assumes it hasn't already. I would say probably between November and January, because like the last market cycle bottoms were in sort of around that time frame, maybe February, November to February, the sort of that like 4 month window or so. What's interesting though is that would be where I would put the highest probability on the bottom occurring, but it doesn't mean that you can't have some probability of it occurring on either end of outside of that range, like saying it could have already been in or it could come later than February. And the reason why I just want to say that one more time is because if you look at the dot-com bubble, I've talked about this a few times on my channel. There were three major corrections or three major bounces before you actually had the bottom. You had a 40% bounce, a 50% bounce, and a 60% bounce in the total in the NASDAQ. So right now, arguably, we've already seen the 40 and 50 for crypto. If we get a 60% bounce off the bottom, after the next bottom, I think it's going to be hard to say that's not the bottom, but there is always that chance that it goes down and puts the lower low. I would say the highest probability is going to be sometime between November and February, and assuming it's not already in, maybe like 13K, 14K, something like that.
Okay, excellent. The Real Plan C, what's your take?
Yeah, I would agree on the time frame. If we're going to see it, yeah, I think we'll see it between now and really early next year. I think after that point, becomes a lower probability. As far as the where we could go to. Like, yeah, I do think that that 15, 16K, I think we could see a wick down. I think, like I've already mentioned, probabilities, we kind of talked about that. I think there's a really decent probability the bottom's in, but there's also still a decent shot that we go to 15 to 16K on a wick. There are catalysts that could bring us down there, and yeah, if the order books are thin, we could definitely visit there for a while. I don't think we'll stay there long if we go there. There's a lot of people that want to buy Bitcoin between 11 and 15K. I mean, they've been talking about and believing it's going to go there for a long time. So, yeah, yeah, that's pretty much it. I think there's still definitely a good shot we go to 15 to 16K. That's kind of the window that I feel is the most probable. And also the time frame. I agree with Ben on the time frame. It's same.
Very good. Okay, this next question is from Vanessa. Do you really believe that the bottoms will be in 2023 as opposed to this year? I think we've just answered that question, but you can see where people are kind of concerned is when to deploy. Is now the time, or do they wait? So any other words for Vanessa you'd like to share?
I mean, as sort of we alluded to earlier, I mean, even if you wait till the end of this year and Bitcoin does have that capitulation, if it's not the bottom, it doesn't mean it's not worthwhile to scale in just in case. I will say this, like, honestly, I mean, everyone that you'll see on crypto Twitter and crypto YouTube, you know, we don't know for sure what's going to happen, right? We're just trying to provide probabilities as to what could happen and what may happen based on all these different indicators. But I remember back to 2019, no one was calling for 14K Bitcoin, and then that's where it went. So yeah, I don't know. I mean, the bottom could be in 2023, but I think late this year and then through basically the first half of 2023 is going to be a decent area in terms of accumulating. I'm hoping for some better accumulation on altcoins in 2023 than 2022, because 2022 has just been a bear market. I mean, yeah, we've had some bounces, but it's just been a bear market. So that's what I would say.
Awesome. Next question is kind of a fun one. Cat with a K. It's for me. What is your favorite brand of running shoes? So back in the day when I used to do a lot of long distance running, it was Asics, and today it's Hoka. And it's the Hoka Carbon X2 is my shoe. Very good answer. Sorry about that. And is Beardy Day Crypto your son? He's my adopted son. Let me see. Let me see. I think that's the end of the questions that we can address in this show. We do have one from Matt C, but Matt C, we're going to take that offline with you as well. And we are over time. If we didn't get to your questions, leave the question below in the comments, and I promise to get to them as well. So we try to keep this short. We've had these two gentlemen tied up for nearly an hour, and it is Friday. It's a holiday weekend. So I want to say a big thank you to the audience, all the members. I want to thank the TherealplanC for spending his time with us here today on this Friday. Welcome to the world.
Yeah. Thanks to you guys. Like, big thanks. Like, obviously for me, it's the first show I've ever been on where I've been nervous, to be honest. And yeah, I just really respect your guys' work and yeah, your communities as well. So it's been great being on, and maybe in the future I'll be less nervous, but yeah, it was a lot of fun as well.
Oh, we didn't pick up on any nerves at all, and we thank you for being here. And of course, Benjamin Cohen, thank you so much as well for being here. Appreciate all you guys and all the knowledge dump today. And I hope the audience gets something from it. I think there's a lot of positive signs, but a couple that do give concern. And the big question is, when we revisit this sometime in 2023, we will know if this time is different. And that's the $1 million question, everybody. So thank you all. Happy Friday. See you all soon.
Can I ask one more question?
Sure.
Who thinks Plan C should start his own YouTube channel? Leave this is for the audience. Leave a comment down below.
Love it. And don't forget to subscribe. Follow him on Twitter. And of course, follow Ben on Twitter. He is a secret closet comedian on Twitter too. He drops some of the funniest stuff, as well as his YouTube channel if you haven't already. Thank you all. Happy Friday. See you all tomorrow.